Hey there, folks. Welcome to another market internal review for the week of February 20th, 2024. We're going to go ahead and start off here with the SPY 2-minute chart. So this week was a short week. This past week we had President's Day on Monday, so only the futures market was open. And beyond that, we also had major earnings that I had mentioned last video. That was NVIDIA earnings. And boy, it effectively pushed the entire market up right along with it. So apparently, a majority of the market was waiting on NVIDIA. Quite insane, if you ask me, but that's the sole word I would use to describe this market for the past couple years. So we started off here Tuesday, and just keeping it more zoomed out to review what I mentioned in depth last video, and that is this purple zone, the first standard deviation ending values from TiWAP on the prior day projected over what would be the current day. And if you watch that video, which I highly encourage you do, if you are at all invested in the indicators that I have built and that I present here on these videos, the rule is short bias under, chop in, long bias over, chop in. And that pretty much was a very good bias direction this week. The second rule, if you recall, is if we have a gap down from the prior range between the TWAP of the current session and the prior TWAP ending of the previous session, the next day, most likely there will be a squeeze. So we see that on perfect display here. Another thing that I have noticed is this week we've had large blocks of almost no tick energy whatsoever. On Tuesday, for example, other than the initial open, we went from about 9:35 all the way to a little after 10 Eastern, almost 10:30 before any tick appeared. We had another block between 10:30 to 11, almost 12. So next day, same thing. Morning open, completely flat tick for the most part. No 500 breaks on either side. That's anything inside 500 plus or minus. That's essentially chop. There's nothing going on. All the way to 11 on Wednesday before we finally saw a tick pop, and then right back down into absolute nothingness, save for a little pop here. And we do have a little bit heavier tick on Thursday after the NVIDIA earnings. Friday also provided a little bit of energy, so that helped. But looking into this, so we'll get into this now. We'll zoom in here on Tuesday's action. So Tuesday, start a nice $1.80 gap here on SPY. And when we are so far below and the range is somewhat expanded, I do like to anticipate perhaps some retracement. And then I try to figure out where could price eventually hit resistance. Would it be prior session low price? Would it be the low of previous TWAP, first standard deviation zone, prior day mid price? And you'll notice here prior day mid price is right around previous TWAP price. That is something I see quite often. And I'm assuming it's because they're both measuring, both TWAP and prior day itself is a range, and oftentimes they will overlap in some ways. So in this case, we had a couple pops up first standard deviation of the current TWAP session, but those ultimately failed multiple times. Even through here, we had this pretty heavy wall clearly from the 406, almost 407, 496, 497 area. And you can kind of see that here. That's kind of what we had, a little fake break before this drop down. We did have one failed TWAP break and retest BNR signal here. So that's what you're seeing. Again, this is not something that I would size in heavy on so far away from prior TWAP range here, I like to see these converge. I mostly like to see that breakout happen either right above up here for longs or right below for shorts. Didn't see that. Okay, so you're probably looking for other strategies at this point, but that one failed. So still data to consider. All right, mostly flat for the rest of the day. That heads us into Wednesday, and here our rule of gap down prior day, squeeze next day, current day here. And here is, it is a feature, it is not a bug. I still get asked about this. TWAP itself will kind of tell you when the tick energy is effectively nothing, when the New York market has no volatility effectively. So you need momentum in order to have some volatility, have some movement. And look at MIT here. We are within 500 plus minus most of the morning. And that's why TWAP is essentially flat. It's telling you the market's essentially flat. We get a little bit here, this first pop down. This must have been literally maybe 501. It doesn't look like it broke, but apparently it did. It was enough for TWAP to get a little juice there and give us a little bit of an expansion. And hilariously, it does. It is where price rejects later a couple times. To me, this continues to show the accuracy of this measurement. Then we have this clear pivot here of prior TWAP price. We get a nice fake break over, another one, and you can see all of the open and close values of all these different candles almost perfectly aligning to this price. Isn't to me, it's incredible to see this all the time. Okay, another little fake break of the prior first standard deviation range. We also get another one here, more TWAP rejections. Now that TWAP's had some more tick energy to average in and calculate new values, we're starting to get a little bit more. But ultimately, it's a chop day. So wouldn't take these kinds of signals potentially, because we've clearly established that we really like being inside of this range by the day, by midday. I think this one here is somewhat valid. The thing I don't like about it is how big it is. It is a nice big statement candle compared to the rest of these, but we've had some big candles and they've not really been able to do much. We are somewhat bearish here on top holdings for SPX, maybe not so much, but NDX and NASDAQ definitely. So I think I probably would have taken, maybe a smaller size short here, but I would have wanted to see us break and retest this here because of how many times it has failed here. So these are not something that you want to just take blindly. Certainly not right now. In my experience, as I mentioned in the earlier portion of this year, January, these just haven't been working that well. And then, of course, I said that, and then we had like a whole week where every one of them almost worked all the time. And now we've kind of hit the chop again. So just looking at this candle, right, we have a nice big 800 plus tick, bear tick. That is not really something you want to enter on if you're doing, say, shorts, puts, especially because this kind of a candle is going to juice the put Greeks like crazy. And the moment you have any kind of pop back against you, it's really going to hurt. So definitely when you see these kinds of ticks, even if you see the TWAP break and retest, try to be patient. Try to make sure that they're not going to come right back into this stupid range that they've been in all morning, which is exactly what they did. So just lots of chop. And we get another break and retest signal. But at this point, trend is showing a potential balanced market. Again, lots of heavy tick, one-sided at this point is starting to establish, but you won't know that by this candle. Top holdings is bearish. So I think this one's another valid signal. We clearly have left the first standard deviation zone. I would keep your stops tight at this point, somewhere logical, probably right above this range here. You see how much they breach this even. So Yeah, it's tough, but there's enough here that says, hey, you know what? New York is potentially flipping bearish for the rest of the day. The thing again that I don't like is that we're seeing all this heavy bear tick and we're not really seeing enough sustain, but this is a pretty good setup. We get the breakdown, we get a little bit of a retest, and we get a close back below. I would have rather seen it break this actual TWAP range level here. We don't get that until here. And I don't know, it's one of those things that by the end of the day, how much more is it really going to go after it's chopped all day? It's tough, right? So I personally would be sizing small, especially with the trend balance, especially with tick average closures already nearing that 500 area. By the time the closures have averaged towards 500 or even below, that's usually the exhaustion point. You should expect some kind of a pullback, which we do have. Of course, we do make it a little lower, but very interesting in the day, okay, where we yeet kind of all the way back through the range and break out on the other side. Um, so that takes us into Thursday here. So Thursday, we come in. I'm not going to turn on the other TWAP ranges. Well, yeah, I'll go ahead and turn them on. So this is one area that I do want to improve on the TWAP ranges indicator is giving a little bit better projections automatically without having to run so many of these range indicators. It's getting a little old. So I may revamp this indicator. So coming hot out of NVIDIA earnings, we we have a nice bear candle here that's inverted to the tick. New York saying, hey, we're really hot here. We've got hot trends. Of course, you know, if you watch any of my videos, I like to wait a little while to make sure all that's settled in because there can be some lag in the measurements or skew, especially on gap days like we had here. So we get our break and retests that we look for here. Nice clean, if you look, nice clean body structure here right off the TWAP ranges. That's telling me that these ranges are going to be effective for the day. And of course, we're starting to get all this wick kind of action here. You wouldn't know that by the time you enter. Bull tick was not heavily pushed, but look at the tick average closures. So that might have been a good sign to maybe wait and see what happens before just blindly following that, especially so early with the morning volatility. This is another great sign here. Seeing all of these base right around TWAP, right around this range level, you might have even grabbed something here with the anticipation of going higher, kind of a buy the dip, because at that point, if this breaks, it's going to be a pretty tight stop that you could have, because at that point something else is probably going to happen and this gap is going to fill down here. So anyways, we get a nice breakout and then obviously we run for the rest of the day, which was a pretty incredible day. I think we hit the third deviation on the session. Yeah, we got really close. I mean, we're definitely hitting all the prior third deviation levels. And that's another thing. I covered this quite a long time ago in an old video, but you can run these when you see the real long flat ones here. These can become your trims later as hopefully you're in a trade and price starts to expand. You see how these candles are all kind of rejecting that area at first, or not rejecting but stopping. See, these all become that little retest pump kind of price pattern that I like to look for, and then here we finally fizzle out before we come back down. So that's something I like to look for. Obviously, I'm always on the lookout for tick divergences rather. Tick divergence. I guess they could be called a diversion. So we didn't really have anything there like that. It seemed like we had one day this week that was a really good one. That one must not have been it. We get bear tick, not breaking down. I'm sure we had tick levels around here. That brings us into Friday. Friday honestly was a pretty awful day. We were holding the gap, daily gap high, and we were over TWAP, and then we just gave it all away. So you can see all this bullish tick piling in, and yet price is coming down. And the big thing you can see here, you see it right on here, is the NASDAQ. So the top tech stocks were really just dumping hard first thing in the morning. So it was pretty crazy. They all opened in advancement, over their prior closes, but they just didn't hold it. And then we struggled for the rest of the day in, I think probably this is like $1.25 kind of range, $1.30, for the rest of the day. It was completely boring. Going over and looking at monthly TWAP, so I've been saying I might adjusting my bias on any kind of big scary pullback until I start to see us holding below the monthly TWAPs, and I have yet to see that. So we had 2 days where Qs were holding underneath. That would be this last Tuesday and Wednesday. Of course, NVIDIA kind of came in and saved the day. I had just started to maybe consider, if we finish the week out under, that okay, we're going to start seeing some more pullbacks. But looking at SPY, we basically based right around and oscillated the monthly TWAP here, and didn't really concern me that much. We had lows formed that we defended on Wednesday. Of course, then NVIDIA comes through and doesn't look like anything's too bad. Now, you could speculate that this is just a high pump off NVIDIA, and the market will sell that off and normalize with a broad mean reversion, which they totally could. I don't think we'll stay in the third deviation, but it's February 25th. We're basically at the end of February already, which is absolutely insane. So I don't know. I don't think we're going to make too much of kind of big moves at this point. Something will change in March probably, I'm sure. But look at this crazy zigzag on Qs. We've kept the monthly low. We've not come back to that. Definitely broke TWAP on the month a couple times based around that first standard deviation low. Tested a monthly TWAP level from January at 422. So that when I see this, when I see a monthly TWAP level getting tested, I take note of those and carry those into the next month, because these lines will not project 2 months ahead, only the month following. So January's levels will plot over February's price action, and then come March, you'll see February's lines, not January. So I'll take these and manually project them myself, myself to ensure that these still kind of stick with me, because if we come back down, I'm going to expect something. Dow was also doing pretty similar. Yeah, doing pretty similar to SPY. Struggled a couple days this past week, just like SPY did, and then with the rest of the market, ran no problem. The Russell is still the big one that's been struggling the most. So, of course, just like the other indices, it came down and flirted with monthly TWAP. But you'll notice off the NVIDIA pump, it did not take much of that same ride that the rest of the guys did. And it's not even broken out of the first standard deviation on the month. So something to keep note there. Lots of positive accumulation though. And we tried to break through the monthly gap again, but failed. So that 200, 205 level, this zone here, I guess you could call it like 201 to 200. That's the big area that needs to bust through and hold. They can't do what it did here. This what got me all excited. Broke through here, no problem. Gap down, broke back over again, and then just dumped it all overnight. Looking at market breadth, so this one here, I think so far everything is looking fine, but one thing I will say is how hot the let me double check here. Yeah, the 5 SMA breadth indicator is on SPY. So past couple times here and here, not really there, but those 2 times, definitely we had a decent pullback. I guess that did have a gap up afterwards, but then let's see, he's about $3.50. We didn't even break through this candle before we continued up. So something to keep an eye on, I suppose. The Dow actually had peaked over that majority line on Thursday. So Russell still has some room. Q's a little muddy. The fat line's covering it up, but most of the RSI is on the spiders, really pumping high. So healthcare, for whatever reason, is rising. Industrials are rising. Finance still on a pretty good tear. I did hear Jamie Dimon sold a ton of JPM shares for like the first time ever. So maybe keep your eye on that stock. I guess could be interesting. But overall, SPY being over the 10, over the 20, it's fantastic. It's still an uptrend. We just had a pullback. Obviously, anything can change overnight, but so far so good. I think for continuation upside. Heading into this week, news wise, some note auctions, inflation rate. Japan's inflation rate is listed as high impact, but that's after hours. So that could provide some spice for the day after, the 27th. Okay, Fed speech. So yeah, that was the other thing this past week. We had a ton of Fed speeches. February 28th, not really seen. Okay, GDP growth. Prior was 4.9. We're forecasting 3.3. So this could be a nasty day. And that's the unfortunate thing is the days that have these, the days prior and sometimes after suck. So this could be a crap week for directional trading. And then, of course, we have more Fed speeches. And the 29th, core PCE and jobless claims. So definitely Chicago PMI, personal spending, personal income. Yeah. So yeah, it's going to be a pretty heavy week still. I mean, nothing huge, but like we had last week. And then earnings. I still hate the earnings tool on TradingView. There's no way to sort. There's nothing about high impact. I'm not seeing anything big sticking out. So, anyways, I think that pretty much wraps it up, though. Like I said, from a breadth perspective here, the RSIs, certainly some of them are a little hot. Maybe expect healthcare to come down, industrials could come down, but I don't believe in shorting just because RSI is high. It could just continue to run for a while. Monthly TiWAP, we're still looking pretty good across the board. New York market was able to close over prior high Friday, so that's great. And keep an eye on futures markets and ride the waves. So overall, pretty good week. Hope you are learning something regarding TiWAP ranges and setting up biases and the market breadth indicators. Please feel free to leave suggestions, comments of any kind. And as always, hope you have a fantastic week ahead. Thank you for watching and happy trading.